there is heavy interest in the October spot contract in New York, but still, that does not mean there's backwardation. But you can also see here that there is heavy physical interest in deliveries in the October contract. You can see here that 1,427 deliveries were made on October 9th. That is more than any other day this month, excluding first notice day, which was September 29th when we had 2,233. This isn't an active silver contract. This is only, and it's not a front month meaning, but there is, yes, they're right, that there is heavy interest in physical delivery for the spot contract in New York. But while we see that silver is back over 50, we hit 50 over here to an all-time high of 51 something. This is the London spot contract. This is not New York. And we here hit 51 again. And now we fell back to 48.40. And now we're back over 50. Things are getting really, really volatile because the monetary system is being torn apart at the seams.
Investors are increasingly scrutinizing the increasing divergence between London spot prices and New York futures, which has elevated silver to the forefront of recent market activity. Rafi Faber underscores that this is primarily a technical observation rather than an urgent signal of supply disruption, despite the fact that certain reports indicate that silver is entering backwardation. Silver remains in contango in New York, indicating that there is an adequate supply to meet the interests of both investors and industrial users. Although these regional variations are significant, they are not unprecedented. They exemplify the intricate and interconnected nature of global silver markets, where temporary price gaps can be generated without indicating a systemic scarcity due to variations in settlement mechanisms, storage availability, and regional demand. Farber emphasizes that genuine backwardation, in which the immediate demand for physical silver significantly exceeds the available supply, is historically uncommon and typically occurs during periods of severe market stress. The conditions necessary for backwardation to initiate rapid and sustained price surges are illustrated by past episodes, including the dramatic rise in silver prices in 1980 and specific moments during the Asian financial crisis. Despite the fact that market interest is at an all-time high, the system has not yet reached a critical tipping point. Industry participants are still able to procure silver for manufacturing, and coin shops maintain inventory for retail buyers. The market's resilience and the intricate forces that influence price dynamics across various trading centers are underscored by the equilibrium between steady supply and increased demand. Farber suggests that investors should approach the silver market with the utmost caution and informed attention in the future. The increase in short-term contract activity indicates an increase in engagement. However, the complete onset of backwardation has not yet occurred, necessitating meticulous observation. It is essential for individuals who wish to capitalize on market movements without overexposing themselves to volatility to monitor physical demand, track settlement prices, and maintain liquidity. We now present the excerpts from Rafi Faber's interview. To ensure that you receive timely updates, kindly subscribe to our channel and activate the bell icon. I appreciate your assistance and hope you enjoy the video.
And you can take your silver and you can put it in a Dirty Man safe using code NGAME10 at checkout. See the link in the description below, NGAME10 for 10% off the Dirty Man safe, and get your silver, your junk silver now at Miles Franklin. Link in the description below, and here are the slides. Okay, so this is actually pretty straightforward. First of all, the people that are saying that there's backwardation in the silver market, they are right that there is heavy interest in spot right now. This is the CME table for silver futures that start in October. Technically, October is spot because it's delivery for immediate delivery. Immediate delivery October. If you buy an October contract, you can get delivery immediately, depending on what number is called if you own the contract. But you can see here that this is from yesterday, October 9th, which was my birthday, by the way. So silver hit $50 on my birthday. Happy birthday to me. Woohoo. And we have here October 2025, 1,344 contracts were added to the open interest here, whereas 1,471 were taken away, were removed from the open interest, were closed out in December. So there is a shrinkage of open interest in the futures contract for December, which is the currently active futures contract, and an increase of almost the same amount in the October spot contract. So yes, there is heavy interest in the October spot contract in New York, but still, that does not mean there's backwardation. But you can also see here that there is heavy physical interest in deliveries in the October contract. You can see here that 1,427 deliveries were made on October 9th. That is more than any other day this month, excluding first notice day, which was September 29th when we had 2,233. This isn't an active silver contract. This is only, and it's not a front month meaning, but there is, yes, they're right, that there is heavy interest in physical delivery for the spot contract in New York. But while we see that silver is back over 50, we hit 50 over here to an all-time high of 51 something. This is the London spot contract. This is not New York. And we here hit 51 again. And now we fell back to 48.40 and now we're back over 50. Things are getting really, really volatile because the monetary system is being torn apart at the seams. But what is going on? It's when we're talking about backwardation in terms of New York minus London, and if it's negative, it's not exactly rare. You can see here if we look at this bottom graph in the gold charts or us graph here of the near month minus the spot. Spot means London, near month means near month in New York. You can see here that very often it's below zero. So technically, as they are counting this as backwardation, technically you could call it that, but it happens very often. It's almost a mirror image. It's not rare. And it's happening again. You have a -2 spread between the London, which is more expensive, and the New York, which is cheaper. So you're saying, oh, spot is more expensive than futures. Okay, fine, but not a big deal. So what is causing this? And you can see here when we zoom in just for the last 5 years, you can see this happens not all the time, right? And this is pretty extreme. It is extreme. This is not nothing, but it's still not backwardation. You can see the last time this happened was in 2023. It happened in 2024 also, and now it's happening now at the same extent as 2023. That spot silver in London is more expensive than the nearest future in New York. It happens, but it's not rare. So why is this happening? Well, very simple explanation for that. Why is London spot more expensive than New York futures? It's because the supply in New York is extremely high and it's coming from London and other places. So you see here that the supply of eligible silver, this is eligible silver, it's not for sale, but it is in storage. It's at an all-time high of 339.61 million ounces. And you have the registered silver, which is also right near an all-time high. The all-time high was 200 million ounces. Now it's 186 million ounces. This is all-time high of both eligible and registered silver for sale in New York. So the supplies of silver in New York are very, very high. And the ETFs are mostly not stored in New York. They are stored in London. And that is what's causing the shortage in London. You can see here, the number here is 790 million ounces is the total. This is not the float. And a lot of that is owned by SLV ETF and other ETFs that the silver sits there in London. And you can see last year, the float was higher. It was above 800 million ounces because this is thousands of ounces. It was above 800 million ounces and now it's below 800 million ounces. And the ETFs, even though they haven't come anywhere close to where they were in terms of silver storage during silver squeeze, they are higher than they were last year. So you have a severe shortage of silver specifically in London, which is why the spot price is more expensive in London and cheaper in New York. But this is not backwardation. What is backwardation? You see here, this is a contango chart. These are silver prices just strictly in New York. October is here, and it's at 46. This is from yesterday, 2 days ago, so the prices are a little bit off. But you can see here it goes to $52 from July 2030, and this is the cash price in London over here. So you can see this is a contango chart. What would backwardation look like? It would look like this. I just took the chart and I flipped it. You can see this is why the letters are backwards. But if everything was the same here and this is what the chart looked like, and forget about this cash bar, this would be backwardation. We are not there yet, but this sometimes happens in the oil market. It sometimes happens in the gasoline market. It sometimes happens in wheat. Very rarely does it ever happen in silver. When it does, that'll be the end game. We're not there yet. In a table, this is what it would look like backwardation. This is a settlement price. This is what I put the black rectangle around. So you can see the settlement price for October silver, November silver, December silver. Settlement price simply means that it's a volume weighted price, and these need to be calculated because it helps the CME calculate how much margin a client needs to have in his account to maintain his position, and that is based on a settlement price. It's volume weighted, so if most of the volume is around, let's say, 47 and some volume and a little bit of volume is around 42, 43, I'm just giving an example, then the volume weighted average of the price for that day's settlement would be whatever this is. And this price is going up as the expiration gets older and older. Sorry, newer and new, whatever, into the future, more into the future and more into the future. You can see here 50, 46.85, it gets higher, 46.97, 47.15, 47.36. It gets higher as we go into the future. That is contango, not backwardation. When this flips, we'll be in silver backwardation, and that would be a sign of near endgame. So here we have a chart from Monetary Metals from Keith Weiner. He is the expert in gold and silver backwardation. His entire thesis is that permanent gold backwardation, which will also be permanent silver backwardation, will be the end of the monetary system. So that means by these charts, the co-basis. The co-basis is the amount of money you get to disgorge silver, which means that is in backwardation. You should get money to hoard silver, which means there is an excess of silver. But if you get money to disgorge silver, that means there's a silver shortage. And we can see here that this red line, it's not above zero yet. It's going higher. It's getting closer to backwardation, but it's still below the 0% mark over here. So when this red line goes above zero, that is a silver shortage. That is silver backwardation. It happened in 1998. I think this was the Asian financial crisis or something. It happened in 2003. It happened very briefly in 2011 during the silver spike, but it has not happened yet. Now, it should be monitored, but the silver co-basis is still negative, which means you still get money to hoard silver and not disgorge it. So if we look at another chart, which is the same thing, but a different way of counting it, you can see here, this is the same chart from Gold Charts or Us. This is the silver co-basis. It's not called that here, but that's what it is.
According to Mike Maloney, the silver market is exhibiting indications of an unprecedented global pressure. Maloney emphasizes that silver has transcended previous record closes, including the iconic January 1980 highs, by utilizing historical data and current market activity. This is not solely a temporary technical anomaly. The evolution of price trends, including the renowned 45-year cup and handle pattern, is illustrated in charts that span decades. This pattern has caused silver to rise from $25 to nearly $50. While claims of manipulation are frequently made in paper markets that are fueled by futures contracts, Maloney emphasizes that margin requirement increases, such as the recent 5.8% 8% hike for gold and 9.3% for silver at the COMEX, can create transient volatility, compel leverage traders to sell. However, the fundamental upward trajectory nevertheless persists. Maloney posits that the genuine cause of the market's surge is a global physical bottleneck. Currently, refineries are unable to process incoming doré bars into deliverable bullion or coinage due to a backlog that has persisted for weeks. In the interim, the majority of over-the-counter silver is being incorporated into ETFs and high-demand markets, such as India, resulting in a near-complete lack of free-floating silver. This constrained supply, in conjunction with robust tangible demand, generates an upward pressure on prices that is virtually impossible to ignore. Maloney emphasizes that investors should regard this dynamic as a structural factor rather than merely paper market noise, and that the shortage at the delivery and refining levels could potentially support sustained price appreciation for an extended period.
Now, normally, they're getting squeezed from two ends here. Normally, the borrow fee is around 0.5% here, maybe 1.5%. Lately, it's been increasing, and we're up to 2.5%, and then suddenly 9%, 10%, 11%, 12.34% that they're paying along with the losses that they're already experiencing. Now, where do they get these shares that they go short on? Because they sell them into the market. They don't own them. They borrow them, and they sell them. They borrow them from their broker, their brokerage house. Where does the brokerage house get them? They don't have a whole bunch of shares that they own, that they loan you. Anybody that has a margin-enabled trading account, the brokerage house has the right to go in and borrow your shares without telling you. So you may think that you own a share of stock or that you own some of this SLV or GLD, but actually your shares have been borrowed and sold into the market. They're owed back. They're supposed to get paid back, but those short sellers are now experiencing the losses of the rising prices and, as a compounding effect, paying this interest on it. So it's going to be a very interesting thing. But what you see here is one candle after another that are up candles with higher and higher closes. A trend that may continue. Tim Hack again. I think the paper market is actually starting to disintegrate. If quoting interrupts, stops don't work for short sellers. So when they set a stop and then the quotes stop working, if there's a gap up and the short seller has limited their losses, it can skip that stop and continue on up. And it just stopped for 15 minutes straight. From Manico 64, IGCOM stopped quoting spot silver for 15 minutes. It said that the London bullion banks stopped quoting. It's now back on. Cracks are starting to show. From TF Metals Report, Turd Ferguson, a.k.a. Craig Hemke. It appears that we may be quickly approaching a moment of true historical significance. Spot silver is up $1.40, but the front month December 25 contract futures only up 20 cents as the backwardation rises to an unprecedented $1.12. You might pay close attention to this for the next few days. Now, backwardation is when you're paying more for delivery today than sometime in the future in a futures contract. And that's where we're at. People want their silver and they want it now. And so that was on at 8:56 a.m. on October 9th. At 11:42, just a few hours later, Bob Coleman says, silver backwardation alert update, $2.50 difference between silver spot cash and silver December futures. So in that short time, it changed that much. Moving along, Hansa Czerny, if Canadian Precious Metals Exchange, an authorized Royal Canadian Mint distributor, is doing this, it could signal that something more serious is order trade of physical precious metals. And he's retweeting Mr. Yuppie. A Canadian precious metals dealer has suspended all metals shipments to the United States. What is going on? Now, I made this chart. It looks a little funny. Why? Because when you go back all the way to January 18th, 1980, Stock Charts does not have intraday pricing. All they have is the close. That's the data that they've got. So the open is 49.45, the high was 49.45, the low was 49.45, and the close was 49.45. And so it's just a single line. But what I wanted to show you, this was the previous high back in, so this is the close that people refer to back in 1980. That is the high. So from Peter Spina, silver closes at historic highs in London, highest price close in history.
In the future, the persistent demand and limited physical availability of silver indicate that it may continue to experience significant upward pressure. Supply constraints are expected to worsen as refineries endeavor to transform raw materials into market-ready bullion, potentially surpassing the current purchasing propensity of both investors and industrial users. This imbalance may result in a period of increased volatility, during which short-term fluctuations occur, despite the fact that the overall trajectory is in favor of higher pricing. While speculative participants may encounter heightened risk as a result of margin adjustments and rapid market reactions, those who possess physical silver may observe a consistent appreciation in their assets. In this scenario, the market may progressively shift from relying on paper contracts to emphasizing tangible holdings, thereby reinforcing silver's status as a highly sought-after store of value in the face of uncertainty. In light of the current market dynamics and supply constraints, What is your prediction for the future of silver prices? Please express your opinions in the comment section below. If you find this video to be informative, please consider supporting our channel and activating notifications to remain informed about our most recent content. I will see you in the video that follows.